So today we're diving into an investment memo on Workday. You know, the cloud software giant that handles HR and finance for a huge chunk of the world's biggest companies. We're going to see what the analysis says really sets it apart and figure out if it has what it takes to be a truly exceptional long-term investment. Let's get into it. And really, this is the whole game, right? In the world of enterprise software, a lot of companies are good. They grow, they make customers happy. But a great one, that's a whole different level. It requires something special, a durable advantage that just won't quit. So, the big question is, does Workday actually make that leap? Well, the memo doesn't beat around the bush. It puts its conclusion right out there from the start. Workday has all the signs of being a truly great business. But hey, you can't just say that. You've got to back it up. So now we're going to unpack the three core pillars of that argument: its competitive advantage, its profit engine, and of course, the risks it's facing. First up, let's talk about the single most important piece of the puzzle for any long-term investment, the company's economic moat. This is its defense system, the thing that keeps the competition at bay. Now, for anyone who's not familiar, an economic moat is really just a way of saying a business has a competitive advantage that's built to last. Think of it like a castle with a massive trench around it. It's what lets a company rake in high profits year after year without getting swamped by rivals. And according to this memo, Workday's moat is seriously impressive. So how can you even measure something like a moat? Well, the memo points to one absolutely stunning number: 98%. That is Workday's gross customer retention rate. What that means is once a company signs on with Workday, they pretty much never ever leave. That's not just a happy customer base. That's the clearest sign you can get of a powerful moat at work. And this right here, this is why they stay. The analogy is just perfect. This moat isn't just about a good product. It's built on absolutely massive switching costs. Once a company weaves Workday into the very fabric of its operations, payroll, financials, all of its employee data, trying to rip it out is unbelievably painful. It's risky, it's expensive, and it is hugely disruptive. It's the corporate version of open heart surgery. Okay, so we've got this incredible moat. Let's see how that translates into what really matters for an investment: a predictable and powerful profit engine. This is where that customer loyalty turns into real financial muscle. Now, this is where Workday's model gets really interesting. It's not just about constantly hunting for new logos. As you can see right here, the majority of its growth, we're talking about 60%, comes from selling more stuff to the customers it already has locked in. For an investor, this land and expand strategy is just beautiful. It means a huge chunk of its future growth is already baked in. And this chart? Well, this is the payoff. For years, Workday was all about growth, 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 even if it meant losing money. But now, it's clearly hit a turning point. You can see this dramatic swing in profitability, going from negative operating margins just a little while ago to a really healthy positive number. This is the business model's leverage really starting to kick in. But of course, it's not all sunshine and rainbows. No credible investment case ignores the downside. The memo is very clear that even a great business faces real threats, and we absolutely have to understand them. The memo boils it down to three big ones. First, you've got fierce competition. I mean, giants like Oracle and SAP are not just sitting on their hands. Second, the broader economy. A lot of Workday's pricing is tied to how many employees its customers have, so a big recession could definitely slow things down. And finally, governance. The founders still have majority voting power, which means regular shareholders don't have much of a say. That's always something to keep in mind. And if we dig into the numbers a bit more, there's another thing you gotta watch: this massive gap between the official GAAP profits and the non-GAAP numbers the company likes to talk about. That huge difference is almost all from stock-based compensation. Now, this is common in tech, but it's a very real cost. When new shares are given to employees, it dilutes the value for everyone else. So the company's true profitability is quite a bit lower than those headline numbers suggest. So you've got this powerful moat and predictable profit engine on one side, and some very real risks on the other. How does the memo weigh all of this to come to a final conclusion? What's the verdict? A huge part of the confidence, it seems, comes down to leadership. The memo gives Workday's management team top marks pretty much across the board. From seeing big trends like cloud and AI coming to making smart acquisitions, this team has a fantastic track record. So a key part of the bet is that you're backing a team that knows how to win. And that leadership is evolving. You can see here a very deliberate and thoughtful transition away from the founders to a seasoned operator in Carl Eschenbach. This really signals a new chapter for Workday, one that's all about scaling up and driving operational excellence. And so we land on the final conclusion. After weighing all the evidence, the memo is pretty clear. Workday's core strengths, its incredibly sticky product, its locked-in customer base, and its multiple paths to keep growing are more than enough to outweigh the risks. In the memo's view, this is pretty much the definition of a high-quality, long-term investment. Which leaves us with this final, massive question for the future. Workday is betting big that AI will make its platform even more essential. The real test will be whether those investments can actually build a new layer to its moat, locking in its dominance for a whole new generation. That's the billion-dollar question.